And now we will see some key provisions of the act. Okay, so empowerment of the bank, yeah, it's a very important, as you know, that empowerment of bank. Hello, my name is Sindhu, and today we will look into the SARFAESI Act, and we will see what is the act and what is the significance of the act, and also what is the key provisions of act, and one more thing, that what is the historical background of the act. So as you know that this topic is important, and you have also got some PYQ on the topic. So let's see the topic. First of all, if you will see the what does it actually mean, so it's understanding for securitizations, reconstructions, financial assets, enforcement, and Security Interest Act 2002. So it's a legal framework. So in this video we will discuss what is the act, what is the background of the act, purpose and significance, and key provisions. So if we will see that what is the act, so SARFAESI Act is mainly for the reform in the reform and empowerment to the financial institutions and banking sectors, and its a main thing was that it's enable the financial institution and bank to reduce their NPA, okay, non-performing asset, and they too just to make the process faster than the regular process we had earlier, because if these acts allow bank to dwell in the process without the interventions of court. So now we will see the what is the background of the act, that why we need a act in 2000 for the financial sectors and the banking sector. So as you know that after the nationalizations of bank in 1969 and 1980s, bank got a very growth in the geographical area. So bank got a wider platform. But what has happened that accordingly private lendings were come down. Okay, so as bank has gotten the wider area, geographical area, and cover more and more people come under the banking institution, so private lending work come down. And but what has happened that a lot of people were took the loan, but due to the inefficiency in the system and the legal framework, people do not repay their loan. Okay, so that loan slowly and gradually convert into the NPA. So people, borrowers default their loans, okay, and defaults their loan. And one more thing were there, that during the 60s and the 90s, SLR and CRR were very high. So as you have read in the economics of your subject, that what is SLR and CRR, that are maintained by the some portion of the deposits were reserved by the bank. Okay, so that's why it's necessary to understand that in 1960 or 60, 62, 63 around, SLR were 25%, and after that SLR in 1990s, SLR were come to the almost like 25% SLR increased to the 38% of SLR. Okay, and accordingly CRR also increases. So CRR, cash reserve ratio of the bank, in 60 it was around 3%, and it's in 90s it increased to almost 15%. Okay, so this increment in the compliance of statutory requirements, bank operations were constrained. Okay, so bank were not free to operate and lend more money to the people. So that's why bank had to rely on some people, and they mostly rely for the stock broker. like share market broker for the money to meet these requirements. And that's why you know that in 90s very famous scam is also there in the stock market. So you probably know that scam. So that type of scam were surfaced because of the loophole in the system's legal framework regarding the security and banking system and all these things. So by considering these things, government has decided to go for a reform and go for something that will boost the confidence of the investors. As you know that by defaulting and by the scam on everything, so government find that the foreign direct there is a credit crunch in the system. Okay, so Indian economy, there was the credit crunch, and also a lot of foreign investors were afraid to invest in India because of the systems and the debt recovery process, because debt recovery process was very lengthy. And previous to that, in 1992 around that, we have a debt recovery tribunal. Through that tribunal we can go for the debt recovery process. So whenever judiciary is involved, you know that judiciary is overburdened by the cases, and a lot of things take a lot of time to recover the debt. So confidence of the private, domestic as well as the foreign investors have gone down. So that's why government has considered these things in very serious notes, and we need something that will help to boost the system of the financial institutions and the bank. So that's why we have constituted the SARFAESI Act in 2000. So what is the main purpose, main objective? To empower banks and financial institutions to take proactive measures to recover their dues from the borrower. So whenever borrower take the money and default and unable to pay their loan, so that time this act empowered the bank and financial institutions to go with the actions and without interventions of the court. So court interventions are eliminated, and providing a legal framework for debt recovery process, protecting the interest of the lender. So here the interest of lenders who are taken care, because as you know that if you are getting loan and you are not repaying, then it's ultimately burden the financial system. So what is the significance? Okay, so now we have enacted the law and we have so significance was the proactive debt recovery. So now bank and institution have some the process that they will take the proactive measures to recover, minimizing the non-performing asset. So by quick positions and sale, it acts as a deterrent. So as you know that through this act, any persons, see if you have ever taken the house loan, so as you know that if consistently for the 6 months, if you are not able to pay the house loan, then the financial institutions or bank have a right to issue the notice you, okay, under this act. And as you know that if the bank or anyone, any financial institution has given you the notice, and within notice, and that will give the almost 60 days notice, and if you are again fail to repay or respond to that notice, then bank have a right to seize your properties and recover their loan according to the market standards and all. And also borrower has also rights in this act. What you can do, so borrower can do is borrower can file a case within 30 days of the issuance of this notice. So these are the examples. If you will take the house loan, then how the act will act will do. Okay, streamlining the debt recovery. So streamlining the, it's made a process how to debt will be recovered, making the recovery simpler and less time consuming, eliminating the court interventions. So as I have previously mentioned, the main aim of the of this act was to eliminate the court intervention, so that time will be less consumed, and the investor will get some confidence. Okay, and balancing the interest of lender as well as borrower to ensure fairness. Okay, so in this act, both the borrower and the lender both have got some right, so that interest will be balanced, contributing to the financial stability. So as you know that if the NPA is less, then the whole financial system will get stabilized. Okay, so that's why it's help in stabilizing the whole system of the financial institutions of the country. That's why it's necessary. Enhancing the confidence of investor, this is very important. As you know that for any development work we need more and more credit. Okay, so credit will come only when you will have some confidence in the system. Like if the investor, if a private investor of a or a foreign investor want to invest, then they should have some surety that if I'm investing here, and if the people will default or loan will be defaulted by the system, then I will have some right to recover my loan or money back. Okay, so that's why it's necessary. So it's a legal framework and confidence of the domestic as well as foreign investor. And now we will see some key provisions of the act. Okay, so empowerment of the bank, yeah, it's a very important, as you know that empowerment of bank. And another is enforcement of security interest and rights and liabilities of secured credit. So everything about the credit, to maintain a good credit record. Okay, and also give a system that will be very smoothly run by the any institution, so that investors and anyone who is apart from the systems and outside the system or in the system will have some confidence that we have something that will cover our that will help in covering our money back. So that's all about the act, but it's not enough. You should read more about this act, so that it will be helpful. As you know that in some last year preliminary examinations, questions have been asked on SARFAESI Act, so that this act is very important. So kindly go through the act in a very thorough manner, read a research papers and the original acts. So, very important whenever you are reading for any act. First, for once a glance, you should take the original acts. Okay, whatever is written there and how it's work, and make a notes. And thank you.